Today, we're diving into the world of one of the greatest investors of all time, Peter Lynch. This guy's a legend on Wall Street. He's known for his incredible track record managing the Fidelity Magellan Fund. From 1977 to 1990, Lynch grew the Magellan Fund from a measly $18 million to a whopping $14 billion. That's an average annual return of over 29%. Talk about crushing the market. Lynch didn't achieve this by being some kind of Wall Street wizard with a crystal ball. Nope, his secret was much simpler and more relatable. Buy what you know. This philosophy resonated with everyday investors. It made investing less intimidating and more accessible. Stay tuned, because we're about to break down Lynch's wisdom into actionable advice you can use to build your own portfolio. Get ready to learn, because Lynch's insights are timeless and can help you navigate the exciting world of investing. Let's do this. But before we continue, if you like this video, please remember to share it with your friends, hit the like button, subscribe to the channel, and then watch some more of our videos. Buy what you know is the cornerstone of Peter Lynch's investment philosophy. It's a simple idea, but incredibly powerful. Lynch believed that everyone has the potential to be a successful investor. Why? Because we all interact with companies and products every single day. Think about it. You probably have a favorite coffee shop, a go-to clothing store, or a must-have app on your phone. These are all potential investment opportunities. Lynch argued that by paying attention to the products and services you use and love, you can gain valuable insights. You might spot trends, identify companies with great potential, and even anticipate market shifts. But remember, buy what you know is just the starting point. It's not about blindly investing in every company you encounter. You need to do your research, analyze the financials, and understand the business model. We'll dive deeper into these aspects in the upcoming sections. So, keep reading. Peter Lynch wasn't just some guy giving investment advice. He walked the walk as the manager of the Fidelity Magellan Fund. This wasn't just any fund, it was legendary. Under Lynch's leadership, the Magellan Fund became a Wall Street rock star. It consistently outperformed the market, making investors a boatload of money. But how did he do it? Lynch had a knack for finding hidden gems in the stock market. He wasn't afraid to invest in companies that others overlooked or underestimated. He looked for businesses with strong growth potential, solid management teams, and a competitive edge. Lynch's success with the Magellan Fund proved that his buy what you know philosophy wasn't just a catchy phrase. It was a powerful investment strategy that delivered real results. So let's explore some of the key strategies Lynch used to achieve such remarkable returns. Get ready to level up your investing game. Peter Lynch loved finding 10-baggers. These are stocks that increase in value tenfold, turning a $1,000 investment into a cool $10,000. Talk about a life-changing return. Lynch believed that the key to finding 10-baggers was to identify companies in the early stages of explosive growth. These companies might be small and unknown, but they had the potential to become industry giants. He looked for businesses with unique products or services, a loyal customer base, and a large addressable market. Lynch understood that these companies had the potential to grow exponentially, generating massive returns for investors who got in early. But finding 10-baggers wasn't about luck or magic. It required careful research, a deep understanding of the business, and a willingness to hold on for the long haul. Lynch knew that true growth takes time, and he was patient enough to let his winners run. Section 5. Beyond the product, digging deeper for success. Remember, buy what you know is just the first step. Lynch didn't just buy a stock because he liked the product. He dug deeper to understand the company behind it. He analyzed financial statements, looking for strong revenue growth, healthy profit margins, and low debt levels. He also paid close attention to management teams, believing that a company's leadership was crucial to its success. Lynch looked for CEOs who were passionate about their businesses, had a clear vision for the future, and were aligned with shareholder interests. He believed that investing in companies with strong management teams significantly increased the odds of success. By going beyond the surface and truly understanding the company, Lynch could separate the winners from the losers. He knew that investing wasn't just about picking stocks, it was about owning a piece of a business you believed in. Section 6. The Lynchian Edge, Patience and Long-Term Vision. Peter Lynch was a long-term investor. He didn't get scared by short-term market fluctuations or panic-stricken headlines. He knew that the stock market was like a roller coaster with its ups and downs. Lynch believed that the key to success was to ride out the volatility and focus on the long-term potential of your investments. He had the patience to hold on to his winners, even when they experienced temporary setbacks. This long-term perspective allowed Lynch to benefit from the power of compounding. He understood that by reinvesting his gains and letting his investments grow over time, he could generate significant wealth. Remember, investing is a marathon, not a sprint. Lynch's success demonstrated the importance of patience, discipline, and a long-term mindset in the stock market. Section 7. Avoiding value traps. Don't be fooled by cheap stocks. Peter Lynch warned investors about value traps. These are stocks that look cheap based on their price-to-earnings ratio or other metrics but are actually deeply troubled businesses. Lynch knew that sometimes a low price is justified. The company might be facing declining sales, shrinking margins, or intense competition. He cautioned investors against being seduced by a low price tag without understanding the underlying fundamentals of the business. Sometimes it's better to pay a fair price for a great company than a bargain price for a mediocre one. Lynch's advice? Do your research, analyze the financials, and make sure you understand why a stock is cheap before you invest. Don't fall into the value trap. Section 8. Learning from Lynch. Timeless wisdom for every investor. Peter Lynch's investment philosophy is as relevant today as it was decades ago. His buy-what-you-know approach, combined with his emphasis on research, patience, and long-term thinking, provides a powerful framework for success in the stock market. By following Lynch's principles, you can gain the confidence and knowledge to make informed investment decisions. Remember, investing is a journey, not a destination. Continuously learn, adapt, and refine your approach as you gain experience. Embrace the excitement and challenges of the stock market, and never stop seeking opportunities to grow your wealth. Lynch's legacy inspires investors worldwide to take control of their financial futures. His story proves that anyone can achieve financial success with the right mindset, strategy, and a little bit of Lynchian wisdom. Section 9. Your path to financial freedom. Start investing today. So, there you have it. Peter Lynch's investment wisdom, broken down into actionable steps you can take today. Remember, investing is not reserved for Wall Street hotshots, it's for everyone. Start by looking around you. What products and services do you love? What companies are doing exciting things in industries you understand? This is your starting point. Do your research, analyze the financials, and don't be afraid to invest in companies you believe in. Remember, patience is key. The stock market is a marathon, not a sprint. Start investing today, and let the power of compounding work its magic. The path to financial freedom starts with a single step. Take that step today, and who knows, you might just discover the next 10-bagger. If you liked this video, please share it with your friends, hit the like button, subscribe to the channel, and watch more of our great videos. Thanks for watching.